Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. If you like making money, I can help you do that. Subscribe to the channel and give me a thumbs up for the content. So I'm going to go over what I call value. So let's jump in the presentation I call value, which ties into market conditions. So this is kind of it intertwined. And what I have here is the commodity to Dow Jones Industrial Average ratio. And what this does is it tells you relative value. It's a ratio. When it's low here, the commodities index is cheap or radically undervalued. And when it's high, that means that it is overvalued in relationship to stocks. Or you could say that stocks are cheap up here in relationship to commodities. So what we want to do is I want to overlay this to the housing starts and see what that looks like. So those circles are overlaid on the housing starts to show you what the commodities cheap ratio and expensive ratio to stocks are in relationship to the real estate cycle. And what we see here is this is about 1.5 is an expansion phase of real estate. So we've got a recovery and expansion phase of real estate where commodities outperform. And we can see that by looking at and overlaying the commodity cheap is 1968, 2000, and 2020. 1968, it's right coming in here. 2000-ish or 1998, and then 2020. And then they peaked when we'll call it 73, 4, and then 2008 are the peaks. So 73-ish and 2008. So they align very well with an expansion phase of real estate. That's what these expansion phases are right here. They're above the 1.5. And we are entering an expansion phase right now with commodities throwing a cheap valuation. As you can see right here, this is a cheap valuation, cheaper than basically anything in history. And we're going into an expansion phase of real estate with everything lined up for a commodities bull market. So what we should see is that when inflation comes, and it is coming, we should see yields on bonds go up. Because what happens is the inflation from real estate will show itself as real negative rates. And real negative rates, bondholders do not like that. And they want to sell their bonds and rotate into other assets. So what you'll see is you'll see a rising yield the yields will go up when everyone starts selling their bonds. Now, this is a 30-year yield. We're seeing it kind of bottom here in 2020, 2021. I'm calling it a bottom, a double bottom. And then I think we're going to continue to go on up from here on out as long as the housing starts continue to increase, which is inflationary. Here's the 10-year looking in. So this is a 30-year here. This is a 10-year short term, and you can see that they're rising. We've got nice big bullish candlesticks everywhere with the small pullbacks, which means it's going to go higher. That's just kind of a psychological pattern that people develop in bull markets. So you have small sell-offs and big up days. So the yields are going up in a nice strong uptrend with the 50-day crossing the 200-day. Next, this is a long-term outlook. This is a weekly chart over many years, weekly candlesticks, looking at the dollar. And you can see this was the previous bull market in commodities all the way to 2008. You can see the dollar was declining roughly the entire time. Obviously, it zigzags back and forth. It's not just a straight shot down. This is the end of the commodities bull market in 2008 when housing starts declined. I can show you what that looks like here real quick. This was 2008, or this is actually before 2008. It started declining before that, and then everything gave way. So the dollar did the same thing, put in a little bit of a bottom, was getting stronger through this period of a recession and recovery phase of housing. And now we're entering an expansion phase, and the dollar usually weakens. So this is showing us that we already have inflation, that the yield's going up on the bonds. We've got the dollar going down in relationship to a basket of other currencies. And we very well could, this is a short-term chart here, we very well could go up a little bit and break out of this chart pattern for a little while, and then we'll head back down. But in the short term, the dollar can strengthen. But on a long-term basis, it's looking pretty weak. We could come up, come back up a little bit and then fall back over. That's my guess, just by looking at the charts. Here's the Dow to gold ratio charted on a weekly candlestick basis over a very long period of time. This was the last commodities bull market. You could see that that gold had outperformed the Dow, and it would end up in a declining ratio. You can see this declining ratio. It ended in 2011. That's when gold peaked. Then we've got the Dow outperforming here, and it broke to the downside on all of these chart patterns, however which way you draw it. So I have a feeling that it's coming back up to kind of back test or retest, however you want to say it, and then I think it's going to come and head on back down to a very low level by the end of this commodity bull market. The commodity bull market will probably be 5 to 10 years in length. So I'm going to get into some ratios here, continuing. So this is the platinum to gold ratio. This goes all the way back to 1971 when things were freely traded. And when you look, you'd say, man, you could buy platinum whenever this ratio gets extremely low. We've got a 0.75 right here in 2016. That'd be a great time to buy, right? Well, what about today? Today we're at 0.61 and it got a low of 0.4. I was buying the living hell out of this thing all in 2019, right here, right here, right here, right here, all in here. I cost averaged in for over an entire year because I think this is a bottom in platinum, and I think it's a bottom in the ratios of platinum to whatever other metal you want to measure it against. You can see that we're heading on up and we're testing this big downtrend line, and I think we broke through it. We're just kind of sitting there right now, and once it gets some traction, we'll head back up to more of a historical norm. Now we're at 0.61. I would say the historical norm's more like 1.5 or 1.2. Somewhere in that range would be an historical norm. Typically, when you get to the downside, they like to shoot to the other side. So we could go 2 times or 2.5 times the price of gold at some point. We may even go 3, depending on what this commodity bull market brings us. But the commodity bull market typically does pretty well for platinum. 2000 to 2008 did pretty well in this range. I should say 98. It was right here. So I think with the valuations where they're at with platinum, I think platinum's a great deal given the ratios. Now here's platinum to palladium ratio. You can see anything below 1 is an absolute steal. Here we are at 0.5, breaking the downtrend line. This looks like a double bottom in here. I traded my palladium for platinum right here. I think it's an excellent deal. I bought it back in this range over here, so it's looking pretty good. Gold to copper ratio looks like we're in this big chart pattern. It broke from the extreme valuations to the downside, meaning copper's outperforming gold, and I think we may pop up a little bit. Shoulder, head, shoulder, and then we'll probably break out down here very quickly or very soon, however you want to say it. This is gold to oil ratio. We're in this pattern. I think this is going to break to the downside. This was the other bull market. You can see we got all the way down to like 4 or 5. That's 4 or 5 barrels to 1 ounce of gold. And here we are at an extreme high. I was a buyer all through here when the charts looked very good, and we're heading on back down. So the ratio is telling us value. And oil through this bull market is going to break through this bottom trend line and probably go all the way back below 10. It's going to take some time though. And the way I look at this is I take a big picture view. I'm looking at Contango Oil and Gas. This is one of the videos I shared and companies on the channel. It's ticker symbol MCF. I take a big picture view. I look at the gold to oil ratio. It was extremely cheap all through here. And what I did is I bought at the bottom down here, all through here. I shared it on the channel, and we were coming up and we broke this downtrend line. And we're retesting or back testing this downtrend line. I think it's an excellent time to buy this. Let's zoom in on the chart. And you can see we're putting in a little bit of a bottom, 50-day crossing the 200-day. I think it's a good time to be looking into MCF if you like it. And this is what I look at when I look at evaluating sectors and commodities. I look at the value first. I look at the housing starts. I look at the Dow Jones to gold ratio. I look at the other ratios, and when the ratios look good and cheap like they do, I look at companies. I take a big picture view and I kind of zoom in. Here's another thing, housing starts to gold prices. And what you'll see here is that the housing starts typically, this is an inflationary period here because we're all basically in an expansionary phase. This is where you've got the big move up. It's usually delayed to the right-hand side a little bit. So it moves up. That's with this expansion phase. We came back down. This is the pullback here. We came back up, and then this came back up. And it's usually delayed by about a year or so, maybe a year or two delay. And then you can see these other moves, but we weren't in a big expansionary phase. It was just a teeny little guy, so it didn't really move much. This was more of a bigger phase, and then it created this big move, which is delayed. So you can see when we enter the 1.5 mark, right in this mark, this is when gold starts to get moving. The inflation comes through the system, but it takes a little, maybe a year for it to get through the system before gold starts moving quite large. And then it takes a little bit of time to work this inflation out of the system. So that's the housing starts to gold prices. This is the gold and housing prices. This is the housing prices here, and this is obviously the gold price. You can see when housing prices start to take off, gold starts to take off in a lagged manner. Once the producer of inflation starts going down, it works its way out of the system, and then gold goes down, just delayed by a few years. So that's what I've got for today in terms of value. Hopefully, I'm starting to tie all this stuff together for you. I think a lot of the people on the channel that have been longtime subscribers probably already know this. So this is how I view the investment world. I've got my ratios in terms of telling me value. I've got housing starts and real estate telling me market conditions. So this is what I look at. This is how I evaluate companies. I take a big picture approach. I say the oil to go ratio is cheap. So I go to oil. I look at oil companies, and then I start looking at the charts. That's how I evaluate things. That's how I have my entry points. And then I just hold on for the entire bull market in commodities. I don't trade in and out. I don't do any of this fancy stuff. I just buy it, cost average in, and hold on. If you guys like this content, subscribe to the channel. Give me a thumbs up. Appreciate you guys listening. This is Finding Value.